The Honest Company, the celebrity-backed consumer goods empire, has paid out $36 million in legal settlements for lying about its products. The company was founded by Jessica Alba in 2012 with a single promise: safe, non-toxic products for families. No harmful chemicals, no deception. That promise lasted about 3 years. In 2015, customers started posting photos of their children with severe sunburns after using Honest sunscreen. In 2016, the Wall Street Journal hired 2 independent labs to test Honest laundry detergent and found the exact chemical in its products that the company swore it would never use. 4 class action lawsuits followed, and the company named Honest settled every single one. But the product scandals were just the beginning, because in 2021, Jessica Alba took this company public at $16 a share. Today, that stock trades at $3.12. And the Forbes net worth that made her famous? Forbes had to take it back. We are going to walk through the full timeline. 5 parts, from the founding to the collapse, to where the money actually went. In 2011, Jessica Alba was not a business executive. She was an actress coming off a string of box office disappointments, looking for a second act. She found one in an idea that on paper sounded perfect. A company selling baby products, cleaning supplies, and personal care items made without the toxic chemicals found in mainstream brands. Safe for families, transparent about ingredients, honest. But most people do not know that Alba did not build this company alone. There were 4 co-founders, and 3 of them had the actual business experience. Brian Lee had already co-founded LegalZoom and Shoe Dazzle. He was the corporate architect. Christopher Gavigan had been the CEO of Healthy Child, Healthy World, a nonprofit focused on children's environmental health. He understood the regulatory landscape and the product science. Kane came from PriceGrabber and handled operations. And Jessica Alba was the face, the name that would sell the mission. That is not a criticism. Celebrity-fronted brands can work. But it matters when we get to the lawsuits, because the marketing never mentioned Brian Lee, Christopher Gavigan, or Kane. It was always Jessica Alba's Honest Company. The trust was built on her name. When the trust broke, it was her name on the lawsuits. The early funding came fast. Lightspeed Venture Partners led the seed round in 2011. By 2014, Wellington Management came in at a $1 billion valuation. By 2015, the company raised another $100 million at a valuation of $1.7 billion. Jessica Alba was on Forbes lists. The narrative was set. An actress built a billion-dollar brand to protect children. It was a perfect story. Too perfect, as it turned out. Now we get to part 2, and this is where the story turns. The first real problem hit in the summer of 2015, and it involved the one product category where trust matters most: baby sunscreen. Customers started posting photos on social media. Children developed severe sunburns despite being covered in Honest Sunscreen SPF 30. The posts went viral. One customer warned, "Do not buy this sunscreen unless you want to look like a lobster." She said it was the second time she had tried the product and gotten burned. 2 class action lawsuits were filed in September 2015 in the Northern District of California. The plaintiffs alleged that Honest had quietly reduced the percentage of zinc oxide, the only active sunscreen ingredient, earlier that year, while continuing to advertise SPF 30 protection on the label. This was precisely the kind of consumer safety issue that falls under CPSC oversight. The CPSC is the Consumer Product Safety Commission, and it regulates product labeling accuracy. Now, if the sunscreen scandal had been the only issue, Honest might have recovered. Brands survive product recalls. But then, on March 10, 2016, the Wall Street Journal published an investigation that changed everything. reporter Serena Ng commissioned 2 independent laboratories to test Honest laundry detergent. The labs were Impact Analytical and Chemir, a division of EAG Incorporated. Both labs found significant amounts of sodium lauryl sulfate, known as SLS, in the detergent. Why does that matter? Because the Honest company had an entire page on its website called the Honestly Free Guarantee, listing specific chemicals it promised to never use. SLS was on that list. Sodium lauryl sulfate is a synthetic surfactant and foaming agent commonly found in conventional cleaning products, exactly the type of ingredient Honest claimed to avoid. The company's entire brand identity was built on avoiding these ingredients, and 2 independent labs found SLS in the product. Honest's response was remarkable. They called the Wall Street Journal's findings junk science. They insisted they used sodium cocoa sulfate, not SLS, and that the 2 chemicals were different. But David Andrews, a scientist at the Environmental Working Group, told the journal that the process of manufacturing sodium cocoa sulfate inherently produces sodium lauryl sulfate. In other words, the company's defense actually confirmed the presence of the ingredient it promised to avoid. A 3rd-class action lawsuit followed, then a 4th, over the broader natural and non-toxic marketing claims. Independent testing found that Honest products contained multiple synthetic chemicals, including phenoxyethanol, a synthetic preservative, and methylisothiazolinone, an antimicrobial agent, chemicals the brand had built its entire reputation on avoiding. This was classic greenwashing, marketing products as environmentally friendly while using conventional synthetic ingredients. Between 2016 and 2017, Honest settled these cases for a combined total of $8.9 million. $1.55 million was for the detergent SLS claims, and $7.35 million was for the misleading natural labels. The Federal Trade Commission, FTC, had been monitoring these false advertising claims as part of broader enforcement against deceptive marketing in the consumer goods sector. $8.9 million. That was the price of being caught lying at a company called Honest. And those were just the consumer lawsuits. The real financial damage had not even started yet. Part 3 is the IPO, and this is where it gets really interesting. By 2017, the company was in crisis mode. The Unilever deal that could have been the big exit collapsed. Unilever had been in talks to acquire Honest at a valuation above $1 billion, but the deal fell through. Instead, Unilever bought 7th Generation, another clean consumer brand competing in the same space as companies like Method and Mrs. Meyer's, for somewhere between $600 million and $700 million in cash. Brian Lee was replaced as Chief Executive Officer in March 2017. Sean Kane and Chief Financial Officer David Parker had already left in December 2016, along with 80 employees who were laid off. A new CEO, Nick Vlahos, came in from Clorox. The company raised $75 million in a down round, meaning its valuation had dropped significantly. The Series D shares had been priced at $45.75. The new round priced at $19.60. The company stabilized. Revenue grew. Then the pandemic hit, and suddenly everyone was buying cleaning products, baby supplies, and sanitizers online. Honest's revenue surged, and the company decided to go public. On May 5, 2021, the Honest company listed on NASDAQ under the ticker HNST at $16 per share. The stock opened at $21.40, and it closed the first day at $23, a 43% pop. Jessica Alba's stake, roughly 5.5 million shares, was worth $129 million on paper. But here is what the IPO documents revealed that Forbes never knew. Alba's actual ownership was approximately 6.6% of the company, not 20%, which Forbes had assumed in 2016 when it estimated her net worth at $340 million. The real number was less than a third of the Forbes figure. Forbes itself acknowledged the discrepancy in 2021, admitting that Alba's stake was worth far less than previously estimated. Another detail buried in the IPO prospectus: Alba did not sell a single share in the offering. The selling stockholders were primarily the venture capital investors, including L. Catterton, Lightspeed, IVP, Fidelity, and General Catalyst. The people who had funded the company were cashing out. Alba stayed in. Whether that was confidence or a lockup restriction depends on who you ask. What is documented in SEC filings is that the board declared a $35 million special dividend before the IPO. Alba's pro rata share of that dividend was approximately $2.6 million. Now part 4. The crash. The IPO euphoria lasted exactly 3 months. On August 13, 2021, Honest released its first earnings report after the initial public offering. The numbers told a story the company had not disclosed during the roadshow. The pandemic-driven demand surge was already decelerating at the time of the offering. Customers were returning to stores. COVID stockpiling was over. The stock dropped 28% in a single day. And then came the lawsuit that would dwarf all the others. On September 15, 2021, a securities fraud class action was filed in the Central District of California. The plaintiffs alleged that the initial public offering registration statement was materially false because it failed to disclose that pre-IPO sales had been artificially inflated by COVID stockpiling, that demand was already declining when the shares were sold to the public, and that customers were reporting safety and quality concerns with the Clean Conscious Diaper line. The judge denied Honest's motion to dismiss. The case proceeded to class certification, and in 2025, the company settled for $27.5 million. $20 million came from Honest and its officers. $7.5 million came from L. Catterton, the private equity firm that owned roughly 37% of the company. Add that to the earlier consumer settlements, and you get $36.4 million in total legal payouts from a company called Honest. The stock, meanwhile, kept falling. From the first-day high of $23.88, HNST dropped to a low of $1.06 on October 13, 2023, a 95.6% decline from the peak. Retail investors who bought in at the initial public offering or above lost nearly everything. We are now at the final part. The aftermath. Jessica Alba stepped down as Chief Creative Officer in April 2024. She remains on the board, but no longer has an operational role. On a podcast with Trevor Noah, she said the business needed streamlined execution, not her visionary approach. She filed for divorce from Cash Warren in February 2025, citing a separation date of December 27, 2024. They had no prenuptial agreement. The divorce was finalized in February 2026, with a $3 million payment to Warren and an even split of community property, 50% to each, including the remaining HNST shares. As of May 2026, Alba beneficially owns roughly 6.2 million shares of Honest, worth approximately $19 million. Her total cash realized from the company over its entire lifespan, including the pre-IPO dividend, stock sales documented in SEC Form 4 filings, and salary is estimated at $10 to $15 million. That is a lot of money by any normal measure. But it is not $340 million. It is not even close. The Forbes number was a fiction built on an assumption that turned out to be wrong by a factor of 3. And what about the other 3 co-founders? Brian Lee went back to venture capital, co-founded BAM Ventures, and launched Arena Club with Derek Jeter. Christopher Gavigan started a CBD brand called Prima. Sean Kane co-founded Hello Bello with Kristen Bell and Dax Shepard. All 3 are completely gone from the company they built. Today, Honest trades at $3.12, with a market cap of about $343 million. The company's 2025 revenue was $371 million, but it posted a net loss of nearly $16 million. A share buyback program was announced in February 2026, but the stock has barely moved. So what is the takeaway from all of this? The Honest Company is not a story about a bad person. Jessica Alba genuinely believed in the mission of safer products. That much is well documented. But it is a story about what happens when the brand promise is bigger than the execution, when the name on the company becomes more important than what is inside the products, and when a celebrity founder becomes the face of a narrative that the actual SEC filings do not support. $36 million in settlements, a stock crash of 95%, a Forbes net worth that had to be retracted, 4 lawsuits for lying at a company that put the word honest in its name. We covered everything from the founding, to the initial public offering, to the settlements, to the aftermath. Every dollar figure in this video comes from Securities and Exchange Commission filings, court documents, or reporting from the Wall Street Journal, Bloomberg Law, and Fortune. If you found this breakdown useful, subscribe, because we do this every week. Next up, we are going inside another celebrity empire that the numbers say is not what it appears to be.